We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the CashFlowPro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of CashFlowPro, your daily real estate investing podcast and YouTube channel. I'm here today with Damion Lupo of eQRP. How are you, Damion?
I'm good, Casey. Good to see you.
Good to see you too. We hope everybody is doing well today, and we're looking to dig into what eQRP is and just have all kinds of fun real estate and real estate syndicating discussion or capital raising discussion or wherever Damion wants to take it. So why don't you tell us a little bit about yourself, where you come from, how you got involved in the business, and we'll go from there.
Awesome. Yeah. So background on me, I've been a real estate investor, entrepreneur for a long time, 25 plus years. And if we go back to my first business when I was 11, I guess it's 34 years because I'm 45. So started that business, hired my parents, felt the entrepreneurial bug and just kept going. And ultimately when I left, I got kicked out of college for starting a bookstore that was basically put the bookstore on campus out of business. They didn't like that very much. So they said, either shut down or we're kicking you out. And I said, well, I've actually paid for school with doing this. And so I finished it up and left and got involved in insurance and then saw an infomercial late at night. I thought, that's really cool. They're doing some real estate stuff there and I can get rich fast. So I jumped into that in the late 90s and went and built a pretty big empire at the time. I thought it was pretty big and probably pretty big for a lot of people listening. Had $20 million worth of property and then I went from 20 million to negative 5 million in 12 months in 2008. And so I had this experience of learning that my net worth and self worth probably shouldn't be connected as closely together as they were, and had to reboot and retool, and that led me to asking some different questions. And along the way, like, what am I doing? Why am I doing it? And then I saw my parents and a lot of other people as they were getting older in their 50s and 60s. I saw them playing by a system, the Wall Street system, that was really kind of screwing them and feeding off of them. And I started to ask, well, is there a better way? And that's where eQRP came into being. It was this idea that you could actually tackle or take control of all these retirement dollars and do something different, putting them into syndications, putting them into gold, putting them into things that were real and not just paper like the Wall Street machine. And so for the last 10 years, I've been helping people take those IRAs and 401ks and invest them into real estate, helping the guys that are raising money find the money through the retirement accounts, because there's $30+ trillion sitting in these accounts. A lot of that money doesn't want to be in mutual funds. It wants to be in real stuff on Main Street. So we've been helping real people get real deals and helping real people create wealth with their syndications for about a decade.
Yeah, I'll tell you, man, it's we have that discussion on this podcast all the time about the moat that the financial industry has built around itself, and the dollars that they control, which in turn charge fees off of and charge this, charge that, and basically are just making their money off of these trillions that are just sitting there. And the fact that there's a company out there like eQRP that can help people figure out like bringing the plug bringing the outlet to the plug, if you will, and saying, hey, here is some, I love that saying, Wall Street to Main Street. And that's one of those things that, man, I know I'm all over the place there, but it brings so many different emotions when you start talking about, hey, listen, you can put your money into real estate and cash flowing real estate. And, and it all the time boggles my mind why real estate people, we have to like give 10 disclosures, and then we have to have people sign a final disclosure that says they read the 10 disclosures, and somebody can go out and go broke buying stock in company XYZ, and everybody's like, oh, sorry about your loss, see you later. And it's mind boggling to me.
Yeah, I mean, the whole thing is set up to really protect and enrich those with the most because they're writing the rules. I had a unique experience where I was involved with someone in Congress not too long ago, and seeing, being in a relationship with someone in Congress and then being on the inside and seeing what actually happens, you realize all the rules are being written by the people that are benefiting from the rules: big pharma, big tech, big banking. And so you go, okay, well, that makes sense why basically everybody else is getting hosed, and the people that are gazillionaires and power mongers, they're the ones that are benefiting because the system is corrupt. So you have to start asking, how do we take the control and power back? And a big part of that is taking the money back out of that system, because if the money's not in the system, if we're actually doing things that we understand, that we can put our arms around, nobody at some distant high tower has the ability to manipulate us. I mean, really, truly, when you own property, you own things. We're building a manufacturing facility right now with a bunch of partners, and we're actually building something. And so, in that case, we actually get to invite all of our investors and all of our people to this thing. It's real, it's dirt, it's bricks, it sticks. And that's the real cool thing about investing with real things. It's not just a smoke and mirrors event. You can actually connect with people and the real thing that they're building.
Yeah, yeah, and it's actually something you can. It's a tangible product that you can actually go out and put your hands on, see, look, smell, touch, and rather than some paper somewhere that says, "Hey, Damien owns 10 shares of XYZ widget company." The whole thing is there seems to be, I don't want to say a pretty high wall, but a pretty steep learning curve to investing in real estate. I don't even want to say investing in real estate with your IRA, but actually making sure that you have a self-directed IRA and converting everything where you can then direct what you're doing. Do you have any tips and tricks on that, or any resources that people could look for or look into and see what, like, learn how to do that?
Yeah, I mean, the first and foremost thing is when you're thinking about real estate, the last thing you want to do is be using a self-directed IRA. And most people, that's what they use as the default. They think, okay, cool, it's a self-directed, I can do investments. The problem is most real estate is going to have debt. And when you have debt, you're going to trigger something called UBIT tax. It's and anytime there's leverage in a real estate deal, and the eQRP is exempt from that. So a lot of times people think all self-directed retirement accounts are the same. And the biggest tip I have is if you're using a self-directed IRA or thinking about it for real estate, don't do it. And what if you are already doing it? Well, you can convert it. You can move it from a self-directed IRA to an eQRP, which is a self-directed type of retirement vehicle. The eQRP system gives you the control and exempts you from the tax. So it's a completely different thing, and people don't even realize there's a difference because one of the other giant systems is the IRA company system. It's a $10 trillion industry. So they're telling you, hey, you can have control. They don't really tell you about the UBIT tax, and then if they do, they sort of blow it off. But the reality is that's a 37% tax.
Yeah,
Why would you want to do that when you can go to zero? Like, keep your money. Don't give it away. It's a dumb tax because you're doing the dumb thing.
yeah, yeah, and I think there's and a lot of people don't realize that either. The UBIT tax had, and isn't there some exemptions and stuff for that tax though? Uh, or is it always, if there's always debt tied to the asset, the underlying asset that?
Yeah, it's so if you have any type of pass-through entity and it's got leveraged real estate, you're going to get hit with it with an IRA. That's just bottom line. People will sometimes if it's a corporation, there's no UBIT tax because the corporation is taxed. And but almost nobody is going to ever do a deal inside of a corporation holding real estate. It's going to be a pass-through entity, so everybody gets the depreciation and everything
Correct.
else. So you're not going to get around it with a self-directed IRA. IRAs are susceptible to that because, quite frankly, Wall Street wants to they don't want people to go and use their IRAs for things, but
Yeah.
the reality is there are other options. And so it's if you just follow the money, you understand why it's being done that way, and there's ways to get out of it and to fix it, but most people
I
don't even
guess I
realize it's a
guess
problem.
what I was thinking about, and it just dawned on me as you were answering that, is the way you could push the UBIT tax off to the end. I think that's the only way around, and that's not around it, that's just delaying the inevitable. Pushing it
That's
off.
exactly right.
Can't you mark it as return I can't remember what it was. If you mark the money coming back as return to capital or something, then it doesn't trigger the UBIT till the end when it's actual capital gain. But nevertheless, that's technical talk that nobody really enjoys anyway. We want to hear stories and we want to talk about real estate. Not tax accounting and stuff like that, which I but that's not the fun stuff, right? So let's talk a little bit. you know, about, I always like to ask, get stories and get things about people's like deals that they've had that have maybe overperformed or underperformed. And so why don't you tell us a little bit, maybe say about your first deal that you got involved in, and what the parameters of that look like.
Well, it's funny because like I've been around doing this stuff for a long time. So in the '90s, I remember my first deal, and one of the awesome things I did was decide I was going to learn how to do everything. And this was a little house that I did in the late '90s, and I laugh because when I look back, I became a regular. Like I should have probably been on the clock at Home Depot because I was over there like 5 times a day, and people started asking me where things are. And I'm like, it's aisle 7. I'm like, how do I know that? So
Oh,
it's
dude.
this is one of those things where, if you're when you're getting involved, like the story was, I didn't really know that I should be leveraging other people's stuff. I decided I needed to do it all myself, and I think that's a very common thing. People want to be the accountant, the attorney, they want to be the fixer, all these different things. And how do you get wealthy? How do you create value? You have great teams. And I
Yep.
didn't know that in the beginning. So I ended up doing way too many things myself. And ultimately, I got lucky because the tide was running. And so that deal, I ended up making like 50,000 bucks on $100,000 house, and I got a
Sure.
boat. So one of the funny parts was a great question that I asked because I went to some seminar and they said, ask what else? And I was like, okay. So some guy came in to buy this house, and he said, I got your down payment because I was owner financing it. And I said, cool, you got the down payment. Interesting. What else can you do? And he's like, well, I don't have any more money, but I got an extra boat. And I said, I'll give you credit for the boat. And so
There
it
you
was just,
go.
asking a question and then seeing what happens. If he said nothing, I would have said, fine, you can have the house. But
It
he
was
got a little bit more down and I had made up the money anyway. So it's, it's always important to ask what else in things. I think you get surprised by what pops up. And that was,
sure.
how you get a boat.
Yeah, people are always willing to trade stuff. I mean, it's anytime you put something online for sale or or whatever, people are like, "Well, I don't have any money, but I'll trade you." Everything I've ever been offered to trade is like a 1987, Jimmy Blazer or whatever, and it's like, come on, I don't need your halfway running duct tape together piece of vehicle, but I just, I guess there is good trades out there from time to time. But anyway, so on into eQRP and what it has to offer, people that come across there. What just give us a little definition, like what does eQRP stand for, and what all is there for people that need it?
It's an enhanced qualified retirement plan. So it's a type of 401k and pension system that allows people to have control of their money, whether they're by themselves, whether they have 1,000 employees, all the employees get the control. And it's the only one of its kind in America where everybody gets control. Nobody else does that. So everybody gets the ability to invest in syndications, gold, Bitcoin, and then you avoid all these goofy taxes like the UBIT tax. And
Sure.
you can do it really with, I mean, one of the interesting things, really, I love real estate. What I love even more than real estate, which is saying a lot because real estate has these amazing tax advantages. I love the Roth EQRP because that's where you end up going to zero tax no matter what forever. And you can move around between different asset classes. So you could
Yeah.
buy a house one year or an apartment, and then you move it into crypto, and then you move it into a Jimmy John's. And
Yep.
every time you do this, there's no tax. Well, if you did that with your own money without retirement, then you'd have tax every time you traded asset classes in most cases. So the EQRP gives you all that control. And it's just a unique system. It's a tax shelter where you can go to zero tax instead of paying what normally is like a 70% of your earnings every year the average American spends on their taxes. And that's crazy when you think about all the taxes. This takes you to zero.
Yeah, and then not only the gains off the non-taxed money. I mean, if you were to take the percentage that you were going to pay in taxes and figure that you're gaining on it, it's win, 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 right? All the way
It's
around. So,
it's a huge deal. The EQRP system was built because I saw people just being stuck and trapped by their
mhm.
by their options, limited options, and I was watching my parents. I watched a lot of other people, and I watched a lot of people that were putting deals together, syndicators and entrepreneurs, and they're like trying to find the money.
Yep,
And what we realize is that there's all this money sitting in retirement accounts that people are like, I'd love to invest it, but they don't even know that they can
yep,
do it. So giving guys and gals the option or the opportunity to go introduce a system to people that can then fund their deals, it everybody wins except for Wall Street. And for me, that's awesome.
That's the ultimate win, right?
Totally. Beat Wall
Everybody
Street
winning
by taking the
except
money
for
out of
Wall Street. Yeah, beat Wall Street,
it.
because there's people up there that are definitely willing to beat you. So, well,
Every
awesome.
day.
Well, what are you seeing on, like, what do you foresee happening in, say, the next 6 months? Because as of recording, end of September here, interest rates are currently on the way up. um, Buyer desire, I guess, is kind of trading sideways to down. Um, Most of, specifically talking about the multifamily space, most sellers want 2 day ago prices. Most buyers want 2 day from now prices, because it just seems like things have shifted. What's your opinion, and what are you thinking, and what are you all doing?
So what I'm thinking is we're going to go through some pain. I think the Federal Reserve put themselves in a corner, and all the central banks around the world put themselves in a really stupid position because they thought they
Mhm.
could play with this whole free money printing and leveraging
Well,
process.
what
They
made
thought there
them
was
think
no
it was going to be
consequences.
different than it was like in the '80s? I don't know what made things. I don't understand it.
It's a great experiment, and people think that they can have a magic formula and they can push it, but eventually gravity takes hold. And so you like Bank of England today, as we're recording this, went and they said, actually, we're not going to do quantitative tightening. We're going to reverse. We're going to go do quantitative easing because they saw the impact on the bond market. And the same thing's happening in the US. And the bond market directly impacts all the real estate because the bond market is where all the real estate funding comes from.
Yep.
And so you've got a big problem. The Federal Reserve is going to have to stop at some point because they're going to collapse the real estate market. Maybe that's their intention. Maybe that's part of this great reset. I have no idea, but that's what they're doing. I think they're going to continue to push up the rates. They're going to continue to do that. And what's happening is you are having people that are hesitating. They're waiting. A lot of the bridge financing for apartments is coming due, and it can't be refinanced and it can't be pushed with other bridge or into Fannie because it doesn't make that the actual asset values have shifted based on cash
Yep.
flow and the squeeze. So I see that continuing, and I think you're going to have a repricing of assets. And it's weird because you've got $50 billion chunks by BlackRock. You've got different groups that have big piles of money, so they're going to want to go in and be opportunistic buyers. And so, is that going to allow the prices to go down? It depends how fast it happens. When you
Yep.
have rates going up, like the 30-year, which mortgage is based on the 10-year Treasury, when those are going up a point in 30 days or less,
Yep.
that's a really fast experience. The markets really can't absorb that very well and digest it. So I think we're going to have some pain, and pain ends up being a huge opportunity for those people that don't get paralyzed by it.
Yeah, I think that you're exactly right. I think there's going to be pain all the way across the board, and it's already being felt in the real estate, from the real estate sales into things, where all of a sudden you had a buyer pre-qualified that could buy X dollar value of a house. Now interest rates are 2% higher, and they're saying, hey, um, if we don't get this closed by their rate lock expiration, it's gonna knock them out of being qualified. Hi, this is Casey Brown, host of the CashFlowPro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making CashFlowPro part of your day. Now, back to the show. And which, again, that's, in my opinion, some of the least felt, or some of the least needle moving pain, I guess, if you will, because it hasn't become a across the board phenomenon yet, where that's, I mean, it's been little spotty episodes of that happening, but nevertheless, I never understand. And you can maybe shed some light on this for me and for the listeners, because I always feel like if I have a question, there has to be more people out there that have it, because I'm, just kind of a regular guy. But um why the Fed puts theirself in these corners where they have to battle out with these big basis point shifts, like, all just, like, so fast that things just go like, they don't. they don't say like we knew the second they dumped $1 trillion of cash money into the economy, what was going to happen. We all everybody that was had with a beating heart and sucking oxygen knew. I'm not even sure that my dogs didn't know that what was coming. And it was like, okay, hey, we're going to dump $1 trillion in, or we're going to dump. Now I know, but let's start with some upward activity.
You know, I think what these people think, whether they're central bankers, whether it's the Tim Geithners and Bernankes and Powells and Yellens, it's them or it's the people in the Treasury, which tend to be the same people because it's a rotating door. What they tend to think is we need to solve the problem to avoid the pain, and there's natural cyclical pain that has to happen to clear out. It's like Japan for the last 30 years has had a bunch of zombie companies, zombie banks, because they don't want to allow a natural shedding. I mean, nature does this every fall. Like we're in fall right now in September, and what happens? Leaves fall off trees, things die, winter kills things, and spring new life happens.
Yeah,
But people think that they can just avoid that. So hey, it's going to be hard, so let's just pump money into a system, and they don't understand the unintended consequences of that with things like inflationary pressures and where people say I'm not going to work, and then you have labor shortages and you have all these problems that are created by the people trying to solve the problem. So what they think is they can avoid recession, they can avoid depression, they can avoid pain. And the reality is they're not that smart. And the reality is gravity again will take hold. So they just exacerbate the problem, create bigger bubbles. And that's exactly what's happened. It's a bigger bubble, it's a bigger problem. And when this sucker pops, it's going to be a bitch.
yeah, and that's what, and that's right. Because we all go through emotional cycles, and I think the emotional cycles tend to translate right over into financial markets and everything else because it's the same thing. Like they always say if you're ever gonna if you're a human being and you're on the way down, they always say, once you hit rock bottom, there's nowhere to go but up, right? And whether it's the human nature is to make that rock bottom higher every time you cycle back around to it, right? So that some people's rock bottom is having to downsize private jets. Some other people's rock bottom is waking up on the street, and that's and until that actually happens, you don't understand it. But it does make sense when you start translating that over to the markets and the wants and needs of human beings that are in this country. So um where where do you think interest rates will stop? I mean, give us right now, you can secure secondary market mortgage 6.25, 6.5 ish. And by the time this airs, there's no telling what we could see. But what do you envision here?
I think my best guess when spending time with people like George Gammon and Daniel DiMartino Booth and Kenny McElroy, like, these are my friends that we spend time teaching together, and, the consensus is most likely we're going to keep seeing the rates go up until something breaks, and it'll break. Just like the Bank of England just said, "Oh, we aren't going to do as the tightening. We need to go to the quantitative easing
Mm-hmm.
because we've got a problem. We've broken the bond market." Basically, this happened with the Fed when the 10 years Treasury market, the auctions, basically there was a ghost town. It was crickets. Nobody was buying because you can't buy bonds knowing that rates are going up because your bonds are going to be worth less in 6 weeks. They're literally going to collapse and you're going to lose 5 or 10% in a month. So what happens? Nobody buys them. And so the Fed had to step in and buy and support the 7 year because they needed to have liquidity in the market. So eventually it's just going to be a monetization of debt. You're going to have the Fed supporting the entire market. And then so what are people going to do? I mean, eventually the bond market is too big. The Fed can only support it so long. I think we're going to keep going. They're going to keep where the rate's going to go. I mean, would it surprise me if mortgage rates end up being at 8 or 9%? Not really, but I think in that range, because we're right at 7 right now. I think between 8 and 9, something is going to fall off. Like the cart is going to fall off the tracks, and you're going to see the bond market implode. The pension system, and that's one of the biggest problems right now. The whole entire pension system is based on bonds. It has to be fixed income.
Yep.
Well, if that market is collapsing because the bond prices are collapsing, then eventually the pension system fails. And then you've got the PBHG and these different organizations that have to step in, and they don't have enough money to support these pensions that are going to collapse. So When does that happen? Not in 5 years. My guess is by the end of 2023, we're going to see something break and the Fed's going to have to reverse course. I don't think they can continue to do this, even though they're trying to stamp down inflation. The problem is you're going to break a system that the entire world relies on, and that's the bond market.
Yeah, the bond market is is everything, and especially when you start talking about hedging some of these long term interest rates. I mean, 30-year rates and even 15-year rates for that matter. It's just because I always hear my parents have always talked about interest being 18%, 20% in the 1980s. I just and they were talking about like their first house they ever bought. They were got a 13% interest rate, and they were glad to have that. It was that was and so and fortunately, I was young enough through those times that I just all I knew was we had food, we had heat, we had air, we had whatever, and nothing else really mattered. So I don't necessarily remember that stuff, but they talk about it being really hard on the farmers. They talk about it being really hard on a lot of things where people got fat for a lot of years over hypothetically got fat or proverbially speaking, got fat over the 70s, and then all of a sudden everybody was like, well, damn, we spent all our cash. Now all of a sudden, and so you just try to start looking at things like that and say, I think that scares a lot of people. I think this interest rate thing scares a lot of people right now, especially people that are of that generation ahead of myself, who went through it once before.
Yeah, so here's one of the things that is helpful for everybody to remember. We've been through everything we're going to be going through. We've done it in different times. We went through a mass pandemic in 1919 with the Spanish flu. That
Yeah,
happened. Okay, COVID, it was a different thing. Actually, didn't. It wasn't as brutal, but we made it out to be. But the reality is, we've done these things. We've had inflations, we've different deflationary events. We've had, we've had all sorts of things, and it's so nothing is really new. It rhymes. the the thing about the rates is it's not that the rates are so bad, it's that the asset prices are so high that and the ability to pay on the debts, like people that are going to do well are the ones that aren't leveraged up their, up the wazoo.
that's right.
So it's a good reminder that being in a ton of debt is maybe not the smartest thing. I mean, I know debt can be considered like George Gammon says it, that's the asset now. It's how much debt can you have? Well, that's interesting when you've got fixed debt and you've got a stabilized asset. But if you've got an environment where you have to get out of something in terms of the debt and you've got volatile interest rate markets, like you've got a problem. And so I think there's value in people saying, okay, when am I going to deleverage? Like,
Yeah,
one of the things that we've heard, probably many people have heard from Robert Kiyosaki, loves his debt, loves his apartments. And I'm like, okay, that's cool. What happens when you've got a market where the actual rents you're getting maybe drops? And in that environment, you don't want to be levered up the butt. You want to have flexibility, and people that aren't leveraged have a lot more flexibility to deal with the storms when the next hurricane comes rolling through their financial life. They're like, oh, I'm actually not going to drown in this thing. So debt
yeah.
is useful. It's also very dangerous.
It is. And the other part of this, and I always reference it on this show because I do remember this, was 08, 9, 10, 11, 12. Now we had a lot of resources. A lot of this country's resources and time were focused overseas into wars we were fighting and so on and so forth. So some of that may, again, that could happen again, but I guess for purposes of like projecting what's going to come about, is that when we start looking at some of these apartment deals that were like in that time period where they were trying to give away plasma screen TVs if you signed a 1 year lease, and they were trying to do all of these things to bring people to market their apartment complex over the next guy's apartment complex. And some of that stuff, man, that to me is even scarier because you bought the asset banking on a 3% annual rent increase, right? Not only are you not getting that, but now you've dropped down to this, and you're having to now it's costing you from your tenant has gone from not costing you anything to get to now it's costing you $400 or $500 to bring him in or her in to become a tenant. So I guess what I'm getting at is it just when these asset prices climb and they start bubbling like we've seen happen, and you've got sellers that are like, man, my property is worth this today, and then all of a sudden, boom, it's not, or they are able to sell it off, and now this new syndicator has got it, and now the problem is just passed on from one to another.
It's what's crazy is that people think that a certain thing is going to continue, and the reality is we've had a bull market for a decade,
Yeah,
and people just think it's like a greater fool theory. Sometimes I remember 5 6 years ago I said there's no way I'm getting involved because this market is insane. It doesn't mean I was wrong. It just means it got more insane, and it could get more insane. Like it's so I think you just have to be willing to acknowledge that things are going to change. They're going to go back and forth, and it you might be super sophisticated, but you might have some dumb dumb on the other side that says I'm going to do something dumber, and you're like, okay.
yeah,
I've seen a number of syndicators that have done well, and there's one I was just with recently, and his claim that he's never had anything go wrong, never lost money in 16 years, and I laughed and I was like, well, you're either lying or you haven't actually been doing anything for 16 years, and so it kind of makes me laugh about we we've got a lot of money chasing anything right now, and
yeah,
even with rates going up, what does that mean? Maybe it means that there's just more equity that's going to take a lower return on its equity
yeah,
and take on less debt. I mean, that's entirely possible because there is a lot of cash. And when the cash is sitting there and we have inflation and the cash is getting crushed, it says, well, at least I have an asset that's making 2 or 3 or 4%. So I could see that happening. It's it's really hard when you're in an artificial environment. You have to be willing to be wrong all the time because the market is going to correct you. And
that's right.
I think it was Warren Buffett said it, that the market can remain irrational longer than I can remain liquid. And that's true for
That's
all of us.
exactly right. 100%. The market can remain irrational for sure. So well, awesome. All right. Well, Damien, listen, I appreciate the discussion today. I know we didn't really lean into a lot of what you all have to offer and so on, but I think we gave a really good indication of the folks could definitely reach out to you if they have questions or concerns or want to learn about EQ. I'm sorry, remind me of the initials again, please.
Yeah, eQRP, and
eQRP.
those and anybody that wants to learn about that, understand how to either raise money from retirement accounts or use your own retirement account, just grab a copy of my book. It's at qrpbook.com, and I'll send it to you. It's on me. Download a
Awesome.
report, sums it up.
Well, listen to this. So we ask a couple of questions to every guest that comes on the show, and the first of those questions is, "What is the best book that you have recently read or are currently reading?"
It's funny. I read my book all the time, so and obviously I'm biased. The book that I have not written that I love probably more than anything is Mastery by George Leonard,
Yeah,
because he and I are both martial artists and in the Aikido world, and it's about mastering life and understanding how you plateau and break through plateaus, and really it's a process because our lives are a process. Just like martial arts is not about getting a black belt; it's about the journey of creating yourself into a black belt. Same thing with our lives.
sure, sure, yeah, and breaking through the. I love that breaking through those ceilings of things that we set that we are programmed into our mind and that we really need to shed some kind of way. So awesome. What is a dream vacation that you've taken or hope to take?
My favorite one that I'll take over and over is going to Africa, and it's because Africa, to me, is the most honest, authentic place where there's just no BS. Whether you see a lion tearing apart a gazelle, or the people playing and dancing with nothing except the clothes on their back, which is very little,
Yeah.
it's the truest, most authentic, real place I've ever experienced, and I love going there every time.
Yeah, I'll tell you that that's Madagascar actually is so high up on my bucket list that it actually like falls back down to the bottom like several times. I mean, it's so far up there, but it's such a stretch to get there. Just
Hmm.
simply the which I know that could it could be argued whether that's truly Africa or not, but that type of a scenario. But I just I couldn't agree more with the African discussion as far as um, it's almost like it's almost like you wonder sometimes if there's not tribes and stuff over there who are like haven't ever been like contacted and that's what, to me, that's what's so neat. Is And I don't think there really is, because I've Googled it before. Is there any people that haven't necessarily been contacted? And for a long time, there was a tribe in South America that kept modern day man pushed out, and
Right.
I don't know that if that's still the case or not, but it just makes you wonder on what if there's some nooks and crannies and corners of the population that haven't been reached, and it's a pretty cool thing. I'd love to see it and can't wait to go,
Yep.
but no, that's cool, man. All right, so you already said eqrp.com. They can get free resources, and then what about your book? Where can somebody get that?
So either on eqrp.com or qrpbook.com, either one, you're going to be able to get a copy of the book. It's right there on the front page. And it's so you
Awesome.
get the book, we'll send it to you, and you'll get to download the summary of the book, and then you can share that with people, read it yourself, share it with people, and that's the first step to take to learn more about what I do.
Awesome, Damion. Thank you so much for taking the time to be with us today. And listeners, as always, thank you for taking the time to be with us today. And please do not forget to slide down there and smash that subscribe button and leave us a review so that others may know what you loved about the CashFlowPro podcast. And Damion, again, thank you so much. Listeners, thank you. I hope everybody has a wonderful rest of the day.
Thanks, everybody. Thanks, Casey.
CashFlowPro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.